Right, let's... Okay, have we got enough chairs, in fact? No, well, I'm going to, there you go. I'll be the gentleman. You please do have a seat. I'll stand. Now, Julia, we're going to kick you off. And I'm just sitting back. I hope we can put the volume up a little bit for that countdown clock. We want to make sure that this is thank you, thumbs are up, real world experience. Right, Julia, the floor is yours. Go hit it. The clock will be going the minute you reach the lectern. You're away. Off you go.
20 years ago this year, I was sitting in a hangar at Heathrow, co-founding BritishAirways.com, and that was my first real experience of how technology can rebalance the power between individuals and institutions. The good news is it helped us switch our distribution channel from being indirect to direct, and that saved a lot of money, both for the airline and for the passengers. The less good news for BA anyway is that it wiped out differential pricing almost overnight. That's £300 million a year from the airline's bottom line. Web 1.0, I think, saw a lot of industries disintermediated in that way, but Web 2.0 is really something else. It can, of course, provide the transparency and the tools for us to DIY, but it also lets consumers connect with each other to leverage their buying power. It is the birth of the crowd. In fact, the very word consumer may soon be redundant for forward-thinking brands as they embrace their customers as partners and even co-investors. Finance, in my view, is one of the last markets to feel this impact, protected to some extent by regulation and by the sheer scale of institutions we have today. But there are some major drivers of change that have created almost perfect conditions for fintech, and nowhere more so than in the UK. Following the financial crisis, there's clear policy support for increased diversity and competition in the sector, both for consumer benefit and future financial stability. Post-RDR, there are now more than 5 million people deciding for themselves where to put their savings and investment. And we have new regulations that mean anyone can crowdfund, regardless of how wealthy they are, provided they understand the risks. After all, wealth is not a skill set. But perhaps the most significant maker, alluded to this morning by Andrea Leadsom, is the new lending ISA, a stunning opportunity to switch some of the £500 billion held in ISAs into peer-to-peer, or in our case, peer-to-project loans. Just 1% of that money makes it a very attractive opportunity indeed. For ordinary people, investment needs to be simple and transparent, and frankly, more rewarding. We fintech folk forget, perhaps, that money just isn't that important to people, and investment is a means to an end and not an end in and of itself. When they are now choosing investments for themselves, we think they will pick things they know about, care about, aspire to, live close to, or where they don't just understand the project or the business, but they get why it is there and what it is trying to achieve. And we think loans to businesses and projects that already have revenue streams are the most appropriate risk profile for ordinary investors like my dad. Trillion Fund is going to be a social crowdfunding, and our goal is to help 50,000 people put $1 billion to work for the triple bottom line of people, planet,
Dan, I'm
and
sorry,
profit.
I'm going to have to cut you off there, but excellent job. Excellent job. Well done. Now, Goncalo, the floor is yours. Off you go. Now, we need to get you over there rather quickly, but it starts as soon as you reach the lectern. Away we go.
Right. What if we could all invest in high-growth companies? But not just any companies, the same companies that highly experienced investors are investing their money in. And what if we could just piggyback on that and invest much smaller amounts together with these highly experienced investors? That's exactly what Syndicate Room allows. We allow normal people investing from £1,000 upwards to co-invest with some of the top business angels in the UK, such as Herman Hauser, Jonathan Milner, and even early-stage VCs such as Passion Capital, which we're hearing about just earlier on in this conference. What we believe in is a fair and transparent method of investing into early-stage companies. Thanks to EIS, thanks to crowdfunding, thanks to even Dragon's Den, a lot more people are interested in investing into early-stage companies. So why shouldn't we allow them to invest in a fair and transparent way into the top companies that the top investors are investing their own money in? Our vision is that on a pound per pound invested, everybody makes or loses exactly the same amount of money. So it's completely fair game for all investors. All investors, £1,000 or £100,000 investors or £1 million investors, get the same class of shares and the same price per share. Effectively, the funding round is set by the lead investor that sets the terms of the investment, and then everybody else can piggyback on that and join them. So where are we now? We launched just under 18 months ago, and we are well on track to hit £20 million that we help companies raising within our first 18 months, which is truly remarkable for the equity crowdfunding space. We're growing very, very fast, exponentially, actually even faster than the over 400% that the sector is enjoying in terms of growth. And we are closing over 80% of the funding rounds that go live on Sinico Dream. So we see ourselves as hitting £50 million by the end of 2015. And we're definitely here to stay and join this incredibly exciting sector that it is equity crowdfunding within FinTech. And we are very thankful for being a UK-based company in a FinTech sector because, as every single person in this room knows, the UK is leading the way in the world in terms of FinTech. And as Claire said earlier, the world is looking at the UK and learning from the UK and the FinTechs in here. Thank you very much.
Excellent, Goncalo. Alain, do you take this in? Now, just as you're walking over there, I hope you realise that this cruel lot are actually willing you all to use up more than your allotted time. Right, Alain, the floor is yours.
Thank you. I'm Alain from Yoyo. So Yoyo is a mobile wallet, except it's a mobile wallet that works. How does it work? We seamlessly combine the mobile payment with loyalty in a way that is meaningful for both the retailer and the consumer. Unlike everything you've seen so far, we have the customers to prove it. Yoyo is doing 150,000 transactions a month. We're growing by 25% month on month. We are already the largest and fastest growing multi-retailer mobile wallet in the UK. The industry has been trying to make mobile relevant for payment for many years, and effectively is continuing to do so. And there are loads of casualties along the way. It doesn't work because the retail industry does not fundamentally have a payment problem that is desperate to solve. Retailers have a data problem. They're enabled to track customer across multiple payment methods. They're enabled to track marketing spend and loyalty spend. They can't manage the fallouts. They can't manage conversions. And in general, they can't provide a better customer experience. So the retailers that will win are the ones that will be able to do all this despite the entrenched legacy system that they use, EPOS and accounting. In other words, the retailers that will win will use Yoyo. What is a better customer experience? It is one that recognizes the mobile phone as being fundamentally a communication device between the retailer and the consumer, not just a dummy piece of plastic. It is one that recognizes that the client's preferences should be part of the experience when you offer rewards and offers. It is one that eliminates the need for carrying money or loyalty stamp cards or even your own wallet. Simply put, a better customer experience is one that is defined by simplicity, by relevance, and by freedom. With Yoyo, a customer can pay, collect rewards, share rewards, track their spending, discover new retailers and new products. Yoyo is redefining the way mobile payment should be, and is making it fun. Today we're announcing that we are integrated into the Apple Watch. So now, for those of you, I'm sure there's going to be a lot of that, who buy an Apple Watch, you'll be able to pay and collect your points by the twist of a wrist here. I don't have it yet, I will soon. So we are announcing also that we are a fast-growing company in the fintech industry, and I'm very pleased to be here to expose Yoyo. Thank
Alain,
you.
excellently done. I mean, almost James Bond-esque there. You know, it was sort of like the Goldfinger moment where the clock was ticking down. You did it right on zero. Very, very well done. Claire, the floor is yours.
Hi, I'm Claire Flynn Levy. I'm the founder and CEO of Essentia Analytics. Essentia combines behavioral science with secure cloud and big data technology to create decision support software for professional investors. And not necessarily only professional investors. As we've heard from others today, more and more everyday people are making more and more investment decisions. But how do they know what they're really good at so they can do more of that, and what they're not so good at so they can do less of that? Making money in investment requires understanding exactly how to maximize your return on energy expended. And that's what Essentia is all about. It's inspired by what we already know works in athletics and in aviation and in other highly skilled, high-pressure pursuits, a data-driven feedback loop. Essentia was created by ex-fund managers like me, neuroscientists, and world-class technologists. It's designed to be not just reporting on who's good at what, but also facilitating behavioral change. So showing the actual investor how to play to his strengths and minimize his weaknesses. We're not yet 2 years old, but already some of the world's leading fund management houses are our clients. And going forward, we're looking to combine an enterprise user experience with a consumer user experience. So really recognize the fact that the person is who lies at the heart of all of this, a person who's making investment decisions and needs to know how to make those well. It seems to me that one thing that London is doing very well, or the UK is doing very well, around FinTech and why it's in the lead, is that it is playing to its own strengths. The UK knows that it's good at FinTech, and so it's very focused on maximizing that. And you can see it in the way that government policy is changing, in the way that funds are starting to flock to us. That gives me great hope for the future of FinTech and great hope for the future of Essentia. Thanks.
What I call respect for your audience. Almost a full 50 seconds left. Maybe next year we'll do it for 2 minutes. Right, Susanne, Chisti, the floor is yours. Big round of applause for Susanne, please. Right, start the clock.
Hi, my name is Susanne Chisti, and I'm the CEO and founder of FinTech Circle. And today I want to give you an update on FinTech Circle, which is Europe's first angel network focused on FinTech, and also announce the launch of FinTech Circle Innovate and the FinTech book. So first, update on FinTech Circle. We are, as I said, Europe's first angel network focused on FinTech, which means we connect investors who have got expertise in financial services and technology and who come together in London to invest jointly in FinTech companies. Therefore, if one of you is interested in joining FinTech Circle's angel network and has got the right background in finance or technology, please talk to us. Equally, we, as I said, we are funding FinTech companies normally up to $500,000 in funding size. And we have got our next deadline coming up end of this week by the 15th of March. So any FinTech entrepreneurs who want to raise funding via FinTech Circle, you can apply online on our website. And we're really excited to be the first angel network focused on only FinTech. We don't do anything else, we just focus on the FinTech sector. I would like to announce FinTech Circle Innovate today, which is a great company focused on a blend of consulting, technology, talent to help established incumbent players such as leading banks, insurance companies to innovate and to take advantage of the FinTech revolution. And we are a great team of 3 founders, female founders as well, so we're also addressing the diversity agenda here. It's a female-led FinTech company, and our goal is to focus and help established banks and insurance firms to take advantage of what FinTech offers. including learning and connecting with the best fintech companies who are B2B business models who want to sell into banks, taking advantage of the insights, technological trends, and ensuring the right approach is being done from a fintech point of view. And finally, I want to announce the FinTech book, which is the first globally crowdsourced book on fintech. And it's open to all of you, so anybody who would like to contribute an article, we are inviting you to submit a 300-word abstract by the end of March. We have defined 8 categories, including fintech capital, fintech success stories, B2B, B2C business models, fintech hubs, and it will be crowdsourced, so all of you have got the opportunity to contribute, and then the crowd will vote on the best articles. Thank you very much.